Imagine a world where money is no longer controlled by banks, where financial transactions are instantaneous and borderless, and where you can own a piece of the digital future. Welcome to the revolution that is cryptocurrency. Here at the Goldwave Network, we dive deep into the currents of this digital tsunami, exploring the mysteries, marvels, and mayhem of the crypto world. Join us as we unravel the story of how a secretive figure named Satoshi Nakamoto ignited a financial wildfire that's reshaping our global economy, one Bitcoin at a time. Buckle up, because this journey through the rise of digital currency is going to be a wild ride. Once upon a time, in the realm of zeros and ones, an anonymous person or group using the pseudonym Satoshi Nakamoto penned a white paper titled Bitcoin, a peer-to-peer electronic cash system. It was the year 2008, a time when the global economy was crumbling under the weight of financial misdeeds, and trust in traditional banking institutions was at an all-time low. Nakamoto's vision was simple, yet revolutionary: to create a decentralized currency that operated independently of any central authority, powered by the cryptographic ingenuity of blockchain technology. Bitcoin's birth was quiet and unassuming. On January 3, 2009, Nakamoto mined the first block of the Bitcoin blockchain, known as the Genesis block. Embedded in its code was a message: "The Times, 03 Jan 2009 Chancellor on brink of second bailout for banks." This cryptic note served as both a timestamp and a commentary on the financial crisis that inspired Bitcoin's creation. Early adopters were a motley crew of cryptographers, anarchists, and tech enthusiasts who saw the potential in this new digital gold. For the first few years, Bitcoin remained a niche curiosity, traded among tech-savvy individuals and used primarily in obscure online forums and marketplaces. One of the earliest and most famous Bitcoin transactions occurred in May 2010, when a programmer named Laszlo Hanyecz paid 10,000 BTC for 2 pizzas. Little did he know that those pizzas would become worth millions of dollars in the future, marking one of the most expensive meals in history. Bitcoin's rise from obscurity to mainstream recognition began in earnest around 2013. This was the year that saw the cryptocurrency's value surge from around $13 to over $1,000, drawing significant media attention and capturing the imaginations of investors worldwide. Stories of early adopters becoming overnight millionaires began to circulate, fueling a speculative frenzy that would come to define much of the cryptocurrency narrative in the years to follow. As Bitcoin blazed a trail, a multitude of other cryptocurrencies known as altcoins began to emerge. Each promised unique features and improvements over Bitcoin, from faster transaction times to enhanced privacy. Ethereum, launched in 2015 by a prodigious young programmer named Vitalik Buterin, introduced the concept of smart contracts, self-executing contracts with the terms directly written into code. This innovation opened up a world of possibilities for decentralized applications, DApps, effectively transforming the blockchain from a simple ledger into a versatile computing platform. The cryptocurrency ecosystem expanded rapidly, attracting a diverse array of participants, from retail investors and tech entrepreneurs to institutional players and even governments. Initial coin offerings, ICOs, became a popular fundraising method, allowing startups to raise capital by issuing their own tokens. However, this gold rush also brought with it a fair share of scams, hacks, and regulatory scrutiny. The infamous Mt. Gox hack in 2014, which saw the loss of 850,000 bitcoins, served as a stark reminder of the nascent industry's vulnerabilities. Despite the turbulence, the underlying technology continued to evolve. Innovations like proof-of-stake, POS, offered more energy-efficient alternatives to Bitcoin's energy-intensive proof-of-work, POW mechanism. Layer 2 solutions, such as the Lightning Network, aim to address scalability issues, making transactions faster and cheaper. Meanwhile, decentralized finance, DeFi, began to emerge as a major trend, leveraging blockchain to recreate traditional financial systems like lending and trading without intermediaries. By the late 2010s, cryptocurrencies had firmly entrenched themselves in the global financial landscape. Major corporations, including tech giants like Microsoft and payment processors like PayPal, started to accept Bitcoin and other cryptocurrencies as payment. Even more significantly, institutional investors began to take notice. Hedge funds, family offices, and publicly traded companies started to allocate a portion of their portfolios to cryptocurrencies, lending the space a newfound legitimacy. As we journey into the 2020s, the cryptocurrency landscape is more dynamic and multifaceted than ever. The COVID-19 pandemic, with its accompanying economic uncertainty, acted as a catalyst for digital currencies, driving both retail and institutional adoption to new heights. Bitcoin, once dubbed digital gold, began to be seen as a hedge against inflation, akin to its precious metal counterpart. Meanwhile, Ethereum's burgeoning ecosystem continued to attract developers and entrepreneurs, solidifying its status as the backbone of the decentralized web. The emergence of non-fungible tokens, NFTs, brought a cultural dimension to the crypto world, as artists, musicians, and celebrities began to tokenize their work, creating new paradigms for ownership and monetization in the digital age. Projects like Decentraland and Axie Infinity showcase the potential of blockchain in gaming and virtual reality, blending financial incentives with immersive experiences. However, the path forward is not without challenges. Regulatory landscapes remain fragmented and often hostile, as governments grapple with the implications of a decentralized financial system. Environmental concerns surrounding the energy consumption of POW blockchains persist, prompting ongoing debates and efforts towards more sustainable solutions. Moreover, the volatility that has long characterized cryptocurrencies continues to be a double-edged sword, offering both lucrative opportunities and significant risks. Today, the world of cryptocurrency is a bustling metropolis of innovation, speculation, and ambition. It is a testament to the transformative power of technology and the relentless pursuit of a more inclusive and decentralized financial system. From its humble beginnings as an obscure experiment to its current status as a global phenomenon, the story of cryptocurrency is still unfolding, with each new chapter promising to be as thrilling and unpredictable as the last. As we stand on the precipice of this digital frontier, one thing is certain: the future of money is being rewritten in real time, and the possibilities are as boundless as the code that underpins it. The rise of cryptocurrency has spawned countless stories of ordinary people achieving extraordinary wealth, transforming lives in ways that seem almost mythical. Picture this: a dimly lit basement in 2010, where a young computer enthusiast named Tom sits hunched over his desktop. Tom, a software developer by trade, had stumbled upon Bitcoin and decided to invest a modest $100. At the time, Bitcoin was worth just a few cents, and his friends laughed at his seemingly whimsical decision. Fast forward a decade, and Tom's small investment has ballooned into a multi-million-dollar fortune, allowing him to retire early, travel the world, and start his own tech company. The rise of cryptocurrency has spawned countless stories of ordinary people achieving extraordinary wealth, transforming lives in ways that seem almost mythical. Picture this: a dimly lit basement in 2010, where a young computer enthusiast named Tom sits hunched over his desktop. Tom, a software developer by trade, had stumbled upon Bitcoin and decided to invest a modest $100. At the time, Bitcoin was worth just a few cents, and his friends laughed at his seemingly whimsical decision. Fast forward a decade, and Tom's small investment has ballooned into a multi-million-dollar fortune, allowing him to retire early, travel the world, and start his own tech company. The early adopters. Tom's story is not unique among the early adopters. These pioneers saw potential in Bitcoin when it was little more than an experimental technology discussed in niche forums. They mined or bought coins when prices were laughably low, holding on through the market's wild fluctuations. Their patience paid off spectacularly. Take, for instance, the tale of the Winklevoss twins, who invested $11 million in Bitcoin in 2013 when it was priced around $120. Their investment soared in value, making them billionaires and prominent figures in the crypto space. The traders. Then there are the traders, those who thrive on the adrenaline rush of the market's constant ebb and flow. Jane, a day trader from New York, quit her job in finance to trade cryptocurrencies full-time. Using strategies she honed in traditional markets, Jane capitalized on Bitcoin's volatility, buying low and selling high. Her keen eye for trends and disciplined approach turned her initial $10,000 stake into a multi-million-dollar portfolio within a few years. Jane's success story is echoed by many who have mastered the art of trading, leveraging market analysis and timing to accumulate wealth. The stakers and farmers. In the decentralized finance (DeFi) universe, stakers and yield farmers have discovered lucrative opportunities. Alex, a tech-savvy investor, ventured into DeFi by staking Ethereum on various platforms. By locking up his coins to support network operations, Alex earned rewards in the form of additional tokens. Similarly, he participated in yield farming, providing liquidity to decentralized exchanges and earning substantial interest rates. These activities generated a steady passive income, significantly boosting Alex's crypto holdings over time. The miners. The story of the miners is equally compelling. Sarah, a computer engineer from Canada, began mining Bitcoin in 2011 using her gaming rig. As the network grew, so did the competition, prompting her to invest in more powerful equipment. Sarah's dedication paid off, and she amassed a sizable amount of Bitcoin before mining became dominated by large-scale operations. Today, her mining earnings have secured her financial independence, allowing her to pursue her passion for renewable energy solutions. The NFT creators and collectors. The advent of non-fungible tokens, NFTs, opened new doors for digital artists and collectors. Imagine Emma, an artist struggling to make a living from her traditional artwork. Discovering NFTs transformed her career. By creating and selling unique digital art on platforms like OpenSea, Emma reached a global audience and sold pieces for thousands of dollars each. Her newfound success attracted media attention, and she now collaborates with major brands, further boosting her income and recognition. On the collector's side, individuals like Ben have also struck gold. Ben, a video game designer, started investing in virtual real estate within blockchain-based games like Decentraland. His early acquisitions appreciated significantly in value, and he sold some of his holdings for a hefty profit. Ben's success in the NFT space allowed him to reinvest in other promising digital assets, creating a diversified and valuable portfolio. Your path to wealth. Inspired by these stories, you might wonder how to navigate this digital gold rush yourself. The first step is education. Dive deep into the world of cryptocurrencies, understanding the technology, market dynamics, and emerging trends. Numerous online resources, courses, and communities are available to help you get started. Begin your journey with a modest investment. Like Tom and Jane, start small and invest only what you can afford to lose. Diversify your investments across different cryptocurrencies to spread risk. Platforms like Coinbase and Binance offer user-friendly interfaces for beginners. Explore opportunities in DeFi. By staking your coins or participating in yield farming, you can earn passive income. Research and choose reputable platforms to minimize risks. If you're artistically inclined, venture into NFTs. Create, buy, or sell digital art and collectibles to tap into this growing market. Stay informed and adaptive. The crypto space evolves rapidly, and staying updated on news and trends is crucial. Follow industry leaders on social media, join discussion forums, and subscribe to newsletters. Lastly, consider seeking advice from financial professionals who understand cryptocurrencies. They can provide tailored guidance based on your financial goals and risk tolerance. The world of cryptocurrency is filled with potential and peril, and the stories of those who have struck it rich are both inspiring and cautionary. At the Gold Wave Network, we're here to guide you through these uncharted waters, helping you make informed decisions and seize opportunities. Join us as we navigate the exciting and unpredictable world of digital finance. And who knows, you might just be the next success story we share. As always, don't forget to leave a like and subscribe. Also, comment below on what our next video should cover. See you next time.